Hi, everyone. Thank you. Our next presentation will be from Eric Fry, VP of Finance at Gevo, which trades on the NASDAQ under the symbol GEVO. With that, welcome, Eric.
Thank you. So Gevo is a company that's based in Denver, Colorado. We've got a little over 100 employees, and we're a developer and builder and operator of low carbon chemical and fuels projects. We have our corporate headquarters in Colorado, as I mentioned. In Luverne, Minnesota, we have a demonstration facility. It's an ethanol plant, and also Gevo's proprietary isobutanol fermentation plant is there with behind the meter wind. There's a plant in Silsbee, Texas, that Gevo has a partnership around to convert alcohols to jet fuel and octane. So Gevo is one of the first companies to make sustainable aviation fuel using the alcohol to jet pathway at that plant. And then in South Dakota, that's our greenfield ethanol to jet sustainable aviation fuel project that you see in box number 4 there. So that's in Lake Preston, South Dakota. That's project that Gevo has designed to be purpose-built, low carbon, using essentially the same technologies that exist today in the agriculture and ethanol industry, coupled with technologies that exist today in the petrochemical industry to convert ethanol to ethylene and convert ethylene to hydrocarbons. And then box number 5 there is an operating dairy manure renewable natural gas facility that Gevo has in Iowa. So a couple different components that we have today. But they're all kind of tied together for the purpose of making and enabling low carbon fuels, particularly sustainable aviation fuel, from carbohydrates. So drilling down into those, looking at kind of the 4 activities that we do. The previous page is kind of our assets. We have our Net Zero 1 plant in South Dakota, as I mentioned, greenfield ethanol jet plant. In the lower right box, we've got our Gevo RNG facility that's operating that I mentioned. And then the lower left box, we have another set of activities that's basically R&D. So this is capital light technology improvements to design ultra low carbon plants that do ethanol jet, and also better processes for converting carbohydrates to alcohols and alcohols to hydrocarbons. One of the technologies is what Gevo calls ETO, it's ethanol to olefins, and that's basically an improvement to existing technology to convert ethanol to hydrocarbons. It essentially skips a step. So you save capital, you save operating cost, and you reduce energy footprint, which means it's lower carbon. But that's an earlier stage technology that we're scaling up and commercializing in partnership with much bigger companies like LG Chem. And then the upper right box is Varity Carbon Solutions. So when Gevo kind of embarked on this journey to make low carbon sustainable aviation fuel, they knew that they would need an audit trail of sustainability all the way through the value chain, from the very beginning, the field where inputs are grown like corn, through the plant that processes it, whether it's using wind or renewable natural gas or other things to reduce the carbon intensity, and then all the way to the end customer. So if it's sustainable aviation fuel, that end customer is a seat on an aircraft. And you need an audit trail to be able to prove your claims about sustainability and to provide your customer assurance that what you're saying is true, but also to provide the possibility for continuous improvement along that whole value chain in terms of carbon and cost. So Gevo had to do Verity Carbon, and I'll talk about that in a little bit, but it's also kind of developed a life of its own, because we realized that other existing biofuels and other companies in our space, they need carbon tracking too through the value chain. There's about almost 60,000 acres and 20 farms through 3 growing seasons, and we've had 100% retention among our farmers who have allowed us to come onto their fields and collect their data. One of the things that's important in this industry is have a team that's multidisciplinary. So you have to bring together people with experience in agriculture, chemicals, traditional, petroleum, petrochemical industry, and regulatory, all under one roof. And so that's something that we've put together. Some of the people on the team have done things like this before. So our CEO and COO, created NatureWorks a long time ago. They created polylactic acid, which is kind of analogous to what we're doing. You start with fermentation and you make a chemical that's a substitute for an existing petrochemical, but from a more eco-friendly pathway. Gevo's had a lot of firsts in its history in terms of sustainable aviation fuel. I won't go through every single one, but just as an example, the first alcohol-to-jet sustainable aviation fuel flight was in 2014 with the U.S. Navy Warthog, as an example. So Gevo spent a lot of time proving the molecules and the processes and the pathways to do sustainable aviation fuel. What we're really focused on now is scaling it up to commercial scale and getting to economic projects that can then be repeated over and over to actually provide volume to an industry that have a lot of volume. So last quarter, we ended the quarter with about $400 million in cash and equivalents and restricted cash. We have more than 350 issued patents and a bunch filed. Some of those are related to Gevo's patented pathway to ferment carbohydrates to isobutanol, which is an alcohol. Other patents are related to designs for plants around fermenting ethanol and then getting ethanol to jet fuel, because you need both the technology and the design there. So we have patents around all those things. We have our RNG plant, and we have our Net Zero 1 greenfield plant site in South Dakota, and then our demonstration plant in Minnesota. That's currently in an idled state, but we're looking at how we're going to use those assets in the future. Skip to this. As I mentioned, Gevo, I think, is one of a very small number of companies that's delivered sustainable aviation fuel, in particular alcohol-to-jet sustainable aviation fuel, to a number of different airports and airlines in the past. And it goes beyond carbon too. The product that comes out of the alcohol-to-jet process that Gevo uses is lower carbon than petroleum jet fuel, but it's also got less sulfur. It's higher energy density. It's got much less aromatics. And those are all things that have sustainability attributes too when it comes to petroleum jet fuel. But the focus is on carbon intensity. The total addressable market for sustainable aviation fuel has really reached escape velocity relative to supply. So the U.S., for example, consumes something like 20 billion gallons of jet fuel per year. But globally, all the sustainable aviation fuel combined, in spite of a lot of talk and excitement, was more like 20 or 25 million gallons last year. So it's really tiny. But having said that, there have been about 180, 200 announced renewable fuels projects globally that are announced in different stages of design and construction. Some of those will make sustainable aviation fuel. More than 90% of that volume is expected to come from one process, which is called the HEFA process. That's a process that is kind of like what the refiners do. It uses fats, oils, and greases, or plant oils to make renewable diesel and SAF. Very few companies are focused on alcohol-to-jet, and alcohol-to-jet is a process that really unlocks another reservoir of feedstock that's sort of upstream and adjacent to HEFA. So it's really needed to unlock that to service all the SAF demand in the U.S. In terms of our cost, the far left shows price of petroleum jet fuel. So we're using round numbers. Maybe it's $2 or $3 a gallon, depending on where crude oil is trading. So our cash cost of production is going to be at a premium, but not a huge premium to that. But then when you add on the cost of our capital, that's going to be that box, that light green and dark green box on the right. So on a fully depreciated basis, the marginal cost to produce can be competitive. But for these first plants, there's a capital cost because you have to purpose-build plants that are low carbon. And then once they're built, once you have modular designs that can be repeated, we can start bringing the capital cost down. How do we get that? Well, on the right side, there's different ways. There's different revenue sources for that. Today, just based on existing environmental credits, we can service our capital for this project and service our cost of production. So the Net Zero 1 plant that I talked about in South Dakota, what does that look like? Essentially, the left-hand side of it is an ethanol plant. There's about 180 operating ethanol plants in the US. The US is the world's largest corn producer and the world's largest ethanol producer. So that's pretty well known. Our ethanol plant will be a low carbon design, so fewer BTUs of gas, of natural gas burned per gallon of ethanol that's produced. And then the right side of the plant is essentially chemical plant to convert ethanol to ethylene and ethylene to olefin. The inputs are important. You need a place where there's good wind. It's really windy in South Dakota. You can use the wind to use electrolyzers and make green hydrogen. Hydrogen's part of the process. You don't want fossil hydrogen because then you're not reducing carbon footprint. And most of what you produce through this process, you mill corn, you grind it up, and you make products. Most of that mass of bushels of corn goes to the food industry. So it's going to make protein. It's going to make corn oil. Protein mostly used for animal feed. It's the fermentable carbohydrate that's then fermented to make ethanol in the U.S. ethanol industry. And for us, we'll take that ethanol to jet fuel. So if you think about what is the future? Our goal is to have patented designs and modularized designs so that we can repeatedly build either full integrated corn to ethanol to jet plants, or going forward, a combination of just an ethanol to jet plant side by side with an existing ethanol plant. There's a number of ways you can do that, but the goal is for this to be repeated. If you look at most projections for fulfillment of SAF demand in the U.S., that red and blue over there is basically alcohol to jet pathways, and the green at the bottom is HEFA. So more than 90% of SAF volume from announced renewable fuels projects globally is from that green pathway. And there's basically a ceiling of how much feedstock is available from that pathway. So we're going to have to go to alcohol to jet to unlock more feedstock. U.S. ethanol demand is in long-term decline because of the electrification of passenger vehicles. So there's also going to need to be another use case for ethanol. And aviation fuel is a good use case because it's hard to electrify. So how does Varity fit into all that? Like I said, to do all this, it's important that we track from end to end the sustainability criteria and the carbon footprint of what we're doing. It needs to be auditable so that if there's a regulatory market, we can prove what we said actually happened. The wind doesn't always blow in South Dakota, so did that gallon come from wind or not? So Gevo did this, set this up with a team of software engineers and people understanding agriculture and regulations, originally for our own project because we knew we'd need it. The idea is that you have data being collected, massive amounts of data in the U.S. ag industry at the field level, not just each farm, but even each field within each farm that's owned. And each field may have different criteria each growing season. So it turns out that the difference in carbon intensity, a contribution to biofuels of one field versus another, we've measured it to be as much as 30 CI points. And to give you a sense of scale, that's the same impact as doing carbon capture. So there's a meaningful difference between just national average growing practices and what actually happened between the variation among different fields. So it's critical to actually measure that and have an audit trail for that. That's what Varity tracking is designed to do. So because Gevo is developing it for our own project, others in the biofuels industry want to use Varity. So it's kind of developed a life of its own. In the past several months, we've announced 3 different ethanol customers that make up about 2% of the U.S. ethanol market, which is a big market. So that's growing independent of Gevo. So it's kind of an independent business that has its own customers in addition to Gevo. Our renewable natural gas plant in Ohio that has 3 dairy farms linked up by pipeline to a gas upgrade system. So it's essentially, this is manure that would emit methane. Methane's a very potent greenhouse gas. We capture that methane, run it through an anaerobic digester, and that's the way we capture the methane that comes off the manure, clean up the gas so it becomes pipeline spec, and then inject it into the local gas system. So that's a cash flowing asset. We think it'll get more cash flowing next year when we get our permanent carbon intensity score in California. And we just completed an expansion of that to about 400,000 MMBTUs per year. So the last piece is our specialty chemicals and technology and licensing activity. So this is a capital light sort of R&D and licensing related activity that we do given our team's background in fermentation technologies. One of the, you can see in this on the left side, Gevo, our Net Zero 1 project does an ethanol fermentation, so that's 2 carbon atoms with an oxygen. Gevo's proprietary fermentation that has its own genetically modified yeast gives you isobutanol. So you get that alcohol is 4 carbons plus an oxygen atom. You can see the 4 gray balls and the 1 red ball, that's 4 carbons and an oxygen atom. So that's an interesting molecule because you have fewer oxygens you have to tear off per carbon. And the goal of petrochemicals and petrofuels is to get chains of carbon atoms, basically. Gevo has an improvement to the process for converting ethanol to these other molecules like ethylene and propylene that they call ETO. I mentioned ethanol to olefins. It basically skips some steps to get you there quicker and save cost and save energy. And if you save energy, you're reducing fossil footprint. So we have a partnership with LG Chem, specifically using the ETO technology to scale up and commercialize biopropylene. And that's an example of a molecule that you can use to make a large number of diapers to bumpers on electric vehicles. So that's an activity where Gevo partners with a much larger company for scale up on a more early stage technology. The Net Zero 1 project that I mentioned before in South Dakota, that's using technologies that already exist in a lot of different forms at scale and just putting them together in a special configuration to reduce carbon footprint. So that's pretty much a summary of Gevo. And if there's any questions, I'd be happy to answer.
All right, hold on. Eric, rolling out Varity, what other applications or sectors does it make sense? I mean, obviously you're applying it to SAF with corn, but if you look at some of these other markets that are out there, is it going to be a similar process, similar rollout? You have obviously the corn market today to be able to use it as an example, but as it applies to multiple feedstocks, is that right?
Yeah. So the basic idea applies to anything where you have a non-fossil input and you're trying to make a product that has a lower carbon footprint than the fossil alternative. So all the things that are on this screen would be examples of places where we could use Varity. Ethanol is a good starting point just because there's a lot of shots on goal, basically, to reduce carbon footprint. There's a lot of data that's already collected in that supply chain, but it's just not utilized in this way. And no one's checking to make sure that there's no gaps and that kind of thing for all the inputs that you need for someone to look on like an iPhone or something and say, here's my carbon intensity score. So it requires a lot of, doesn't require a lot of capital. It requires a lot of, brain power and time and persistence. But you could do that in other industries. It's just ethanol is kind of a good starting point.
You talked about your RNG plant and how that's been growing and doing quite well. Do you have plans to expand and do that elsewhere in the country?
Yeah, so we've been really focused up to this point on that plant, debottlenecking, expanding, and then getting our permanent carbon intensity. I think at our core, we're a carbohydrate to hydrocarbon company. So, so things like sustainable aviation fuel are kind of our our core. But at the same time, RNG is a profitable activity. There's a lot of targets out there to do anaerobic digestion, to do RNG. I think we are looking at growing that and expanding that, either organically or inorganically. And there's a lot of ways to do that, but we have to be judicious, because we don't want to lose, sustainable aviation fuel. At the same time, we don't want to lose a missed opportunity to grow, in that region, for example, and leverage what we're already good at in terms of doing dairy RNG. So short answer is yes.
Eric, hi. On your feedstock waste, there's a huge footprint of poly waste in the Pacific. I would say it's like 400 square miles. Is that of interest? Are you looking at that?
So that's not a target that we have right now. When it comes to waste, like municipal solid waste or plastic waste floating in the ocean, that's a little bit far afield of our starting point today. In principle, there are companies that are taking municipal solid waste or taking medical plastic waste and other forms of waste and using other processes and technologies to make value-added products. Those industries, those emerging industries, would be a potential next set of customers for Varity tracking in terms of carbon tracking, but it's not a focus of Gevo today.
Eric, we have a question from one of our online attendees, and it has to do with your IP portfolio. And they're asking if you can kind of reconcile what they see as a disconnect between the value of your IP and your current market cap.
Yeah, well, so the short answer, I guess I would say, is, for me to reconcile the disconnect, I guess I'd have to say that it should be disconnected, and I don't think it should be. I think there is a disconnect. We have demonstrated. I think Gevo has an unassailable IP portfolio on isobutanol. There's pretty much two ways to do alcohol to jet. You can make ethanol and then do sustainable aviation fuel, or isobutanol. And Gevo kind of has IP around the first way and is a first mover on the second way. So I think the disconnect is sort of, from our perspective, profound. Our view is we are well capitalized in terms of our development pipeline and what we need to do to execute. We don't believe that we need a lot of capital. We think it's only a matter of time before that disconnect sort of solves itself, because the demand for sustainable aviation fuel is inevitable in our view. The need for alcohol to jet is critical. We don't think it can happen without alcohol to jet in our view. And sooner or later, the world's going to not just talk about fuels, but they're going to talk about all the materials that come from petrochemicals too. And things like ETO play into that. Not to mention the plant design. In the early 2000s, the U.S. built dozens of ethanol plants when that industry kind of exploded. We think that there will be like another leg to that, where you're going to want to have modularized, patented designs for a low carbon ethanol plant and an ethanol to jet plant, and we want to take advantage of that too. So our patent portfolio we see as having a lot of value, and there is a disconnect, and our goal is to really rectify that through execution.
Thank you. And there's another question asking for an update on funding for NZ1 and backup funding plans as related to startup.
Yeah, so the key anchor for funding for Net Zero 1 is the Department of Energy Loan Guarantee Program. Although we expect to do parallel path, syndicated bank loan markets as well, and private credit markets next year. But the long path item is the Department of Energy Loan Guarantee Program. We think that construction needs 24 months after financial close, and we think financial close will take us well into next year. We started the formal due diligence process with DOE when they invited us to term sheet negotiation and due diligence a few months ago, and we essentially need them to finish, onboarding their advisors, their financial advisor, their engineer, their independent engineer, their legal counsel, all that stuff, and then complete their diligence work for us to get to financial close. So that's the timing, and the timing will basically fall out of that. In the meantime, Gevo expects we think a significant amount of what we spent on Net Zero 1 is repeatable. It's generating an asset that'll help us repeat the project in terms of the design, the modularized design of the facility. So we'll probably put, I think we've guided to anywhere between 50 on the low end and $100 million on the high end of capital between now and financial close, well into next year.
All right, Eric. I think that's it for today. Thank you for your time.